people think about our current financial system as kind of sacrosanct and it's the only way to do it. But if you study the history of money, really it's got created in like 1971 when Nixon went off the gold standard in the US, and we currently have the system where most central banks don't have any link to a hard commodity underneath. I think fiat currencies are going to continue to exist for a long time, but we're also seeing the birth of a new monetary system that I would call the Bitcoin standard instead of the gold standard. And in the crypto space, that is a return to sound money and something that is inflation resistant, because democracies around the world, once we came off the gold standard, are struggling to balance their budget. They're all running deficits, and it's caused inflation in fiat currencies. And so there is a real segment of the population that is looking for a new system based on hard money.
Governor, you have to address this. Is the euro in danger from a Bitcoin standard?
No, I'm a bit skeptical, Brian. Sorry to say it about this idea of the Bitcoin standard. We left the gold standard, but the gold was only a technical mean. What is important is what you say, Bert, that monetary policy and money is part of sovereignty. And we live in democracies, and I think the public role is key. And if we lose that, really you lose a key function of democracy. That said, I always keep repeating that money, as long as it exists for centuries, has been a public-private partnership. You need a public anchor, whatever its form is. Remember, silver and gold were sovereign assets, so it was on the public side. And then you had banknotes, and you will have CBDC. But anyway, the most important part of payments is in the private sphere, and this is the development of tokenized private money. But this tokenized private money must be regulated to inspire trust, confidence.
It's fascinating that you say that. Brian, you mentioned a complementary role that you could play. Is there a complementary role in Europe when there's so much regulation and it is about the digital euro?
So I think that crypto is very good for fiat currencies. It's very good. Bitcoin is good as a check and balance on deficit spending, because when there is a lack of trust, or people, from like in a US context, if people are worried about inflation, or maybe in places like Argentina or Turkey or Nigeria, they are going to flee to the thing that they believe is going to store value more. So I think in general, it's going to be very complementary. And like you said, I think it comes down to trust. And so if fiat currencies can maintain trust and not have, the money printer kind of debasing everybody, then they'll survive. But if countries that have bad behavior on that dimension, Bitcoin doesn't have a money printer. The supply is fixed, and people will go to it in times of uncertainty, kind of like they did with gold.
The guarantee for trust is independence on central bank side, and we have a core mandate, and we are accountable to that. But sorry to say that I trust more independent central banks with a democratic mandate than private issuers of Bitcoin, which have a very useful role. But
Bitcoin is a decentralized protocol. There's actually no issuer of it. So that's in the sense that central banks have independence. Bitcoin is even more independent. There's no country or company or individual who controls it in the world. And so anyway, I think it's a healthy competition, because if people can decide which one they trust more, and I think it's actually the greatest accountability mechanism on deficit spending.
What do you make of all the volatility in Bitcoin, and where do you think it's going from here?
Yeah, I think that a lot of people maybe do not know much about or understand what happened on October 10th. There was something called a flash crash. It had to do with a software glitch at Binance, and it caused auto deleveraging. And that was a shock that hit the system that has been reverberating as over-leveraged entities are trying to get themselves straight. We think that is playing itself through. In fact, we think it has played its way through. By some estimates, $28 billion of damage in that auto deleveraging cycle. I think we're through that. I know there's a lot of fear about the 4-year cycle. We didn't have much of an upcycle by Bitcoin standards, so we think we're pretty well through the down cycle here. We may test in this 80 to 90,000 range on Bitcoin, but we do think that the test will be successful. it will be the shallowest 4-year cycle decline in Bitcoin's short history, and then we're off again. We think this is 3 revolutions in one: a global monetary system, rules-based, competing against fiat currency, to be sure. It is a technology revolution, and it is the leader of a new asset class, which, surprisingly, and I put it in my New Year's letter, Bitcoin and gold are not correlated with one another. Even though everyone calls Bitcoin digital gold, there's a 0.14 correlation between the two over the last full market cycle.
I guess I would respond to that by suggesting, okay, if I agree with you on that, Bitcoin, or at least gold, is proving itself to be a safe haven asset, I think it's fair to say, whereas Bitcoin, which you suggest is growing in its role as a safe haven asset, doesn't seem to be much of one, considering it's 7 straight down days. And if ever there was going to be a rush to safe haven assets over the last couple of days, wouldn't this be it, where Bitcoin would be getting a boost from concerns over more tariffs in Greenland and upset market? And it's not.
Yeah, if you take from the end of the equity bear market in 22 to today, I put this in the letter as well, gold has appreciated, or it had appreciated at that time, by 165, 170%. Bitcoin had appreciated by 360%. So it had done a lot of work coming out of the bear market as a risk-on asset. We get institutions now moving into Bitcoin, starting with the spot Bitcoin ETFs, and we have a whole new investor who basically is told, as it is being introduced to this new asset class, there's a 4-year cycle out there. And so I think what has happened is we didn't have the big up move around the ETFs that many expected. And we have institutions biding their time, just trying to understand the asset class, trying to understand this 4-year cycle, and trying to understand if they're going to be caught in a 75% down round. We don't think they are, but they certainly are doing their homework, which is great. And we think Bitcoin is both a risk-on asset and ultimately a risk-off asset, especially if you're looking for a hedge against inflation. It's mathematically metered to go up now 0.85% per year, and that's a lower growth rate than gold. But it's also a hedge against deflation, because in periods like 08-09, there's not the counterparty risk in Bitcoin, that transparent network that we saw in the banking system back then.